Well, Bitcoin has been on a tear, surging about 250% in the past 3 months. But as investors pile in, Wall Street veteran Scott Minerd issued a warning recently. In a recent tweet, Minerd said, quote, Bitcoin's parabolic rise is unsustainable in the near term, vulnerable to a setback. The technical upside of 35,000 has been exceeded. Maybe time to take some money off the table. Although he has also said down the road, in years, Bitcoin could be worth 400,000. Joining us now with more on all of this is our friend Scott Minerd, Global Chief Investment Officer and Chairman of Investments at Guggenheim Partners. And first off, as a part owner of the Dodgers, I know you're good friends with Tommy Lasorda, so my sympathies there, Scott. They've got a new coach in heaven. So welcome to the program, Scott. Your Bitcoin 400,000 comment got a lot of attention. Was that tongue-in-cheek, or do you mean it?
No, I mean it. It was really interesting. It was a passing comment in an interview, and I'd be honest with you, Brian, I could have said the United States government is bankrupt and the Federal Reserve is insolvent and Bitcoin's going to 400,000 someday, and they would have just talked about Bitcoin, which tells you something. I mean, it's telling you that it's turning into a bit of a frenzy. You can see, a number of trading platforms are saying that they're going to start limiting orders to buy Bitcoin because they can't keep up with the retail demand. I mean, these are all signs of a frothy market, and markets like this are prone to harsh setbacks, but it doesn't, over the long run, undermine the bull case.
And the bull case is, as we heard earlier, 21 million will only ever be mined, 18.5 about that outstanding. You have firms like Guggenheim, which has said in the future you may be able to allocate a certain percentage to the cryptos, not just Bitcoin. If you got a lot of demand and very little supply, it's like Tesla. If Tesla had 5 million shares outstanding instead of a billion, Tesla stock would probably be a $1 million equity.
Well, yeah, and it's interesting. You're right, and I think decimalization is going to be ultimately the solution to the total valuation. It's just like splitting your stock. Bitcoin, it can be decimalized down to 8 places. So we quote stocks, for instance, in dollars and cents, and so it wouldn't be uncommon to decimalize this to get into more tradable sizes and pieces, and a price that doesn't look as crazy as $400,000 would. Brian, one of the big questions. I mean,
just like the halvening, or just like the stock splits, or people, it's the same stock, just worth half, but it's cheaper, so people can buy in. Let's move on, Scott. We had the Federal Reserve Chair Jay Powell on in sort of a live one-on-one interview with Princeton University, hitting on a lot of topics. We focus a lot on inflation, I certainly have, but unemployment, it sounds like, maybe more important to them. Do you believe the Federal Reserve will either keep rates low and or keep their bond buying program going until employment is maximized?
Well, that's a great question. I think they're going to face a hard time tapering, as we've seen over the last week, as there have been more discussions about tapering from members of the Fed. And, of course, over the last couple of days, they've sort of started to walk it back. What's going on in the bond market and the backup we've had is not something they want to see. And so they want to, I think, calm the markets down to realize that they're not going to taper soon. But your question, Brian, really is about, what is the sequencing of taper versus unemployment versus raising rates. And I think that they've learned from their experience of raising rates while reducing the size of the Fed balance sheet was not a very successful operation in 2018. So the question now is, what is the threshold for unemployment before they begin to taper? And if they're not seeing inflation pressures, I think they'll let unemployment go to 3%, and before they start to think about tapering.
And that could be years. I hope not, but it could be.
Right, and I think, look, what's really interesting in this new paradigm of theirs is that 2% is an average. Okay, that's great. I mean, if they're going to try to make up for how much inflation has stayed under 2% for the last 10 years, they can run the inflation rate fairly hot for a number of years before they get overly concerned.
Yeah.
About addressing it as long as unemployment continues to fall.
Do you think that continues equities moving higher throughout the year, Scott? Or is there some existential or exogenous risk we're not talking about?
Well, there are risks all over, Brian. I mean, I think people know that I'm a pretty conservative guy. But right now, given the Fed purchase program, the idea that we're going to get a lot of stimulus out of Washington, I think stocks have a green light. And, I probably would think that at least through the end of the first quarter, it's a pretty safe place to be investing money. I mean, on a relative basis.
All right. And before we let you go, Scott, you always have some of these unusual ideas. I know we talk about Bitcoin because, to your earlier point, it gets the attention, the equity markets and bonds, but there's a lot of ways to make money out there. And with higher rates and maybe a weaker dollar, could be a good scenario for certain types of credit. On this program, we've talked about things like airline leases, bank loans. Is there one sort of smaller, less talked about part of the market that you and your team at Guggenheim are really finding a little interesting right now?
Well, I think that the securitization market with, the level of where airlines secured by aircraft at a very low loan to value is, trading at fairly distressed levels. I mean, single A, triple B rated aircraft securitization, Brian, can trade between 3.5% and 4.5%, and yet there have been a number of double B bond deals that have come to market, at like 2 5/8. So I think that given the fact that it's cheaper than junk bonds, and that we're likely to continue to see junk bonds spread to treasuries compress over time, that's probably a good value sector of the fixed income market.
All right. I love the unusual idea because it's a good segue into our next guest. Scott Minerd talking Bitcoin, the equity markets, Fed Chair Jay Powell, airline leases. And again, Scott, our condolences for Tommy Lasorda. 90 had a great life and bled Dodger.
Shepard Smith here. Thanks for watching CNBC on YouTube.